our money is losing value day by day due to inflation. £2.7 million for passive wealth growth without compromising your beliefs. Sukuk, Gatehouse Bank, Strider, Tax. Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome to the Muslim Network, a channel dedicated to growing the wealth of the Ummah through Islamically compliant businesses. Today's video is about growing your wealth passively. Unfortunately, there is no get-rich-quick scheme in this video, but by taking the necessary steps today, it can have a massive impact on your financial health in the future. But first, we need to establish why it's important that we are proactive about our funds. It is important to understand that our money is losing value day by day due to inflation. The buying power of £1,000 in 2025 is approximately equivalent to £500 20 years ago, and this trend will only continue as more and more money is printed. The typical way to mitigate this is to collect interest. Money we as Muslims cannot accept. Yet we keep our money in bank accounts whilst the banks profit from it by lending out interest-bearing loans, some of which goes to evil corporations such as Elbit Systems, the leading weapons manufacturer in Israel. Not only are they funding the genocide through our tax money, but also by banks like Barclays and HSBC, where we keep our money. Only by closing our accounts and activist pressure were they forced to divest. So the question is, why leave our money with these banks? My personal opinion? We don't. We ought to put our money to work ethically. Just as a disclaimer, I'm not a scholar and this is not financial advice. I simply want to share the various options that are available for passive wealth growth without compromising your beliefs. Some of the options here may raise some valid skepticism, which is healthy. Ultimately, I believe the final decision should be guided by scholars and experts. Therefore, if an option is marked as Islamic, be sure to look for the proper certification or seek the advice of a qualified Sharia advisor before proceeding. So let's define what Sharia compliant investments are. These are investments that avoid interest, riba, and excessive risk, qarar, whilst channeling those funds into Islamically compliant business activities. So what are the options? Well, option 1 is simply switching to a Sharia compliant bank. If you want low risk and modest returns, consider banks like Al Rayyan or Gatehouse. They invest your money into Sharia compliant ventures and split the profits with you. Whilst the profit is not guaranteed, your money is protected by the UK Financial Services Compensation Scheme, up to £85,000. If you need flexibility, be sure to check out their instant access options. Personally, I use Al Rayyan Bank, which aims to return 3.6% each year, and they have a proven track record of achieving this. And to me, that is way better than the 0% I get from banking with someone like Santander. Something to note is that their instant access options often mean lower returns. Unfortunately, those profits are taxed, but we do get personal allowances based on the tax band you are. The basic rate has an allowance of £1,000, higher rate has an allowance of £500, and as you may have guessed, the additional rate has an allowance of £0. If your returns could exceed those limits, you might want to consider moving the rest of your funds into an ISA, which unfortunately is lower return, but 100% tax-free. To maximize your returns, simply divide the personal allowance you have and divide by the expected annual return to get the maximum amount of money you need to have in your bank account each month to maximize that limit. So for a higher rate earner, you divide £500, their personal allowance, by 3.6%, the rate of return over a year, which gives you 13,888. So if you're in that band, you would not want to exceed £13,888 for every month. Anything above that, you'd probably want to move into an ISA because then it starts to make sense and you don't have to deal with the tax burden. Some of you may be looking at this as interest with a name swap, and that's a fair criticism, and there's a reason for that. A lot of these financial products are based around conventional finance products. This makes it easier to sell and compare between competitors. But if the underlying practice is Sharia compliant, does it really matter? I'll discuss more about this later on. Option 2. Islamic ETFs and funds. If you want Sharia compliant growth without the homework, you can invest into ETFs or index funds. These funds screen out non-compliant businesses and invest your money for a small fee into ethical halal portfolios. But wait, you might be thinking, what the hell is an ETF and an index fund? Well, an ETF or an exchange traded fund can be traded like a stock. Buy and sell anytime during market hours, lower fees, higher liquidity, can include stocks, bonds, currencies, commodities and more. Bearing in mind, these would be Sharia compliant bonds, so something like sukuk. Whereas index funds track a market index, i.e. the top 100 Sharia friendly companies. Passive, set and forget style that you can trade once daily, cheaper than an active fund. So this option allows you to let the experts handle the investing that provides growth potential, but it comes with the downside of way higher risk compared to something like a savings account with a Sharia compliant bank. Volatility can be wild. No guarantees your money won't dip, but hey, it's less stressful than stock picking and historically has a higher success rate. Mitigate risk by investing into multiple stocks. If some go down, you would hope that others would go up to average out as a net positive. With that said, if you're feeling up to individual stock picking, you might want to look at apps like Zoya, which will allow you to screen Islamically compliant businesses. Some possible funds that you may want to explore are the iShares MSCI World Islamic ETF and Wahed FTSE USA Sharia ETF, which leads me quite nicely on to the next option. Option 3, robo-advisors and high-yield platforms. Wahed Invest is your Sharia compliant set and forget solution. Build a tailored portfolio based on your risk appetite, no math required. Their ISA wrapper means tax-free returns, more on this later. Adjust your risk level at any time via their app. A common pension strategy is to go aggressive early and dial down the risk as you near retirement. Something to note about Wahed Invest is the fees are fairly high, but if you like what you see, be sure to read their terms and conditions and sign up using my code in the description for a free £10. Curate Capital, from the brains behind Islamic Finance Guru, offers access to high yield ventures. Think startups, real estate and fixed funds. Their innovative finance ISA is tax free, but eligibility is strict. You need to qualify as a sophisticated investor or high net worth individual. Be sure to check their site to find out exactly what this means. These guys face a lot of criticism, but I believe what they're doing is very beneficial for the Ummah, and may Allah help them with their journey. So I've mentioned ISAs quite a lot so far. I should probably explain what they are. They said there are two things guaranteed in life: death and taxes. An ISA allows you to sidestep the latter. An ISA or individual savings account allow individuals to save or invest up to £20,000 across all accounts per tax year, according to the 2023-2024 limit, without paying income tax, dividend tax or capital gains tax on any returns. There are two types of ISAs: cash ISA, earn profit, not interest, via Islamic banks like Al Rayyan, Gatehouse and FIDA. Stocks and shares ISA, the go-to for growth. Platforms like Wahed Invest, Curate Capital and Trading 212 let you invest in halal stocks and funds. You can have multiple ISAs as long as the total contributions equal £20,000 or less. The earned returns on this money is tax-free. In the case of Trading 212, it is a flexible ISA, so the net deposits need to equal or be below £20,000. The limit may change over time, and there has been some discussion about the cash ISA limit being reduced down to £4,000. So you may want to watch out for that for April 5th. There's also one more variation, the lifetime ISA. You can deposit up to £4,000 per year and gain a grant from the government of 25%, so £1,000 per year. If you put more than £4,000, there's no gain to it, so personally I wouldn't go above £4,000. You can then invest that money, but uninvested cash earns interest. Islamically, we cannot accept this interest. There are ways to get around this, either asking the provider to stop providing interest on uninvested cash, or take money from your external accounts and donate it to charity. There is no benefit to it, but it means that you're not accumulating interest. The catch is you lose 25% of what you withdraw, which is more than what you gain from the government, so avoid withdrawing unless absolutely necessary. The money can only be withdrawn for buying your first home or when you reach pension age. It's not often HMRC let you off with your taxes, so take advantage whilst you can, as they have a history of shutting down beneficial programs for the average person. Option 4. Islamic bonds, also known as sukuk. Sukuk represents ownership in a tangible asset, project, or investment, generating returns through profit sharing, rental income, or asset growth, not interest. Investors receive periodic payments tied to the asset's performance. While yields are typically modest, the risk is low. Options include banks like Al Rayyan Bank or funds. More details in my upcoming Islamic Finance Fundamentals deep dive video, inshallah. Option 5. Sharia compliant business investing. Invest directly into ethical ventures through platforms like Curate Capital or private opportunities, i.e. startups or partnerships. Risk varies widely based on management, market conditions, and business models. Always assess thoroughly before committing. Option 6. Platforms like Cardos vet borrowers and facilitate Sharia compliant peer-to-peer lending. While I haven't tested it personally, it's a novel alternative to profit sharing without interest. Option 7. Property investment. A tangible, lower volatility asset class. Islamic mortgages, i.e. Gatehouse Bank, Stride Up, use models certified by the AAOIFI, the global standard of Sharia finance. Controversy exists around some of these structures, but these institutions remain compliant with mainstream Islamic finance principles. With buy-to-let properties, there seem to be more options like offer. Islamic finance is growing, and supporting it allows them to drive down prices and potentially move closer to a more ideal Islamic model. This can only happen with new competition, so hopefully the Muslim Network can help provide new solutions for Muslims. With all those options, be sure to diversify wisely. Sukuk and property offer stability, while businesses and peer-to-peer lending may carry higher risk. Align choices with your financial goals and risk tolerance. And as you make profits, be sure to convert those gains into physical assets that are less prone to the market conditions. So we're going to do a quick demonstration of what the impact you can have on your future. Okay, I'm in this investment calculator. It refers to interest here, but what we're talking about is profit growth, because we'll be investing the money. I just want to highlight the impact of inflation. So we have £10,000 in the account for 45 years. It's negative because it erodes away the buying power of our money, of our currency, and we don't add any money to the account. It just sits there. So from £10,000, we've gone down to £4,000. We've lost 60% value in the space of 45 years because we just let it sit there whilst the banks loan out money on interest-bearing loans, and they get richer whilst we lose money. So let's switch that and say we get 3.6% from our savings account, and we do 0 additional contribution. That's up to 49,000, so with 4.9 times our input. Obviously that'll be eroded away, so let's see, I'm not sure this is the correct calculation, but let's say you get a net return, so 3.6 minus 2% for the inflation. It's still doubled in value over 45 years. So 8% is the rate of return for the S&P 500. We can't invest into them because they are not Sharia compliant, but what you'd want to do, especially as you earn more money, inshallah, you guys are, I'm sure, are very intelligent and hardworking, and you'll get high paying jobs as a result, whether that be your own business or working for another company. Let's hope you can save £500 per month for the next 45 years on average. Okay, well, numbers change if, if it's weighted towards the end, but we'll just ignore that. So if we do that, £500, honestly, as you earn more money, it becomes a lot more feasible. It might not seem it now if you're young or haven't gone into the career that you like, that pays most, but it is possible. It's not crazy to do, as long as you're living below your means. I cannot stress how important that is. But we can see with that we've done £270,000 of contribution, but with 10x that, and we have £2.7 million. You're literally a millionaire. If you start at 20 by 65, you're a millionaire. And you can see, look at this chart. The sheer amount of growth you get towards the end because of that compounding effect is absolutely insane. But there are some offers on Curate Capital that offer you 10% return, let's say, and now we're getting 5.24 million, which is crazy. Multi-millionaire status. But say you want to retire at, let's maybe something a bit more realistic. We're looking at you want to retire 55, so we're looking at 35 years, starting from 20. You may not have £10,000 right now, but you have 1,000 maybe, and you're contributing something like 300. Obviously, as you get older, and hopefully as you earn more, rather, you will be contributing more. But if you calculate that, still a millionaire. By 55 it's insane. I can't express to you how these numbers, when I was younger, it was just, obviously I'm not there, but when I was younger, nowhere near possible. I didn't think it was possible without a business and doing this, that, and the other. But you can just, if you invest your money and you stay disciplined, you have huge amounts of growth. Millionaire status is possible. And again, I don't want you to think money is everything. I'm just saying, be responsible with your money. Don't overspend. Don't buy cars or finance cars. Not only is it not halal if it's interest bearing, but it doesn't do anything for anyone. You try to impress others, they think you're a douche. You won't feel satisfied. The only thing you should chase is the approval of Allah. That's about it. And honestly, I believe that to be the only way to get true happiness is actually peace. That's what you can't be happy all the time, but you can be peaceful all the time. But that's an aside. That's with a 10% rate of return. But something a bit more realistic, we take inflation into account. Let's say you get 6%, but then because of inflation at 2%, you get 4% return. £273,000. Most people won't ever see that in their account. But this is not ridiculous. You put in 100, to be fair, 126,000 is a lot, but over 35 years, it's not that much. But this is just a quick demonstration of how, if you're smart and consistent, you can have a huge impact on your financial health to the point where you can become an actual millionaire. As I mentioned before, there's a lot of controversy around Islamic finance products, and I do not claim to be an expert, but I will share my 2 cents. In the West, the financial products have been typically offered by Western banks like HSBC's Amana Bank and Deutsche Bank, which do not fully understand the Islamic spirit. They simply saw a market where they could generate another income stream, but they also did not want to create something too different from their existing products, and they wanted to use existing contracts, as these have been industry standards and considered bulletproof. It is also my understanding that many people became disillusioned with the industry due to not following through with the Islamic spirit, that being fairness, risk sharing, and transparency. So what does this mean for Islamic finance in the West? It means whilst the product is Sharia compliant according to scholars, the presentation is in the form of conventional products because they are reworked versions of them. This is by no means ideal. I do think as Muslims we should strive to innovate and create new products by Muslims for Muslims, which is part of the goals of the Muslim network. We also need to understand we do not live in the same times as the Prophet ﷺ. Inflation was not a thing, or if it was very minimal, and we are currently using fiat currency. Compared to the Prophet's time, peace be upon him, they were using gold-backed assets, which introduces a layer of complexities. Whilst Islamic finance is not a set rules, we have been provided guidelines on how most dealings should be conducted. If you want to listen to the struggles of those that have worked in the industry, I recommend listening to the creators of Faida or reading Heaven's Bankers by Haris Irfan. At the end of the day, the economy and politicians are not geared to help average people, let alone Muslims. That's why as Muslims we should be proactive about the funds that we earn and also share the information that we have about growing our wealth. But it is important that money is only in your pocket and not in your heart. It should not be your only goal in life, but financial stability is very important. With that said, if you want to meet like-minded Muslims, be sure to join the Muslim Network's Discord channel, which is linked in the description, and be sure to follow us on social media. Assalamu alaikum wa rahmatullahi wa barakatuh.